What sort of things make up your credit score? Hi, I'm Genevieve Parch with Hearthstone Real Estate.
Hi, I'm Kendra Enquist with Strategic Mortgage Solutions, NMLS 534251.
Factor number 1, payment history. Payment history makes up 35% of your credit score. You want to be sure to pay your bills on time, all the time. One thing you may want to consider doing is establishing an account specifically to cover the automatic payments for your minimum amount due on all your credit cards and loans. Of course, you'll always want to pay more, but by having the minimum payment automatically deducted, you'll avoid the consequences of being late and will establish and maintain a solid payment history. Consistently paying creditors on time is the most important factor in determining your credit score. Even one missed payment can have an impact on your FICO score. Consider the number of accounts with missed payments over the last 7 years, amounts owed on delinquent accounts, collections, and negative public record information.
Factor number 2, credit utilization makes up about 30% of your credit score. Credit utilization refers to how much of your available credit you're using on your revolving accounts, your credit cards, your store cards, and your unsecured lines of credit. Your credit utilization should be less than 30%, so this means if you have a $10,000 credit limit, you'll want to carry a balance of $3,000 at the most. Remember, the balance listed on your monthly billing statement is the balance reported to the Bureau. Your revolving debts do not report more than once a month, and they will not reflect whether you pay them in full every month. This is why it is very important to watch your overall utilization and try to keep it at or under 30% to maximize your score.
Factor number 3, age of credit accounts. The older your credit accounts are, the better. This shows lenders that you are responsible for your credit you do have. It also shows consistency in your ability to manage your debts over a period of time. This factor accounts for 15% of your overall credit score.
Factor number 4, the different account types that you hold play a huge role. Credit cards, in-store charge cards, lines of credit, they are all revolving accounts, and these are typically unsecured. Installment loans can be secured by collateral or unsecured, also known as signature loans. Installment loans are not revolving and will typically have a set payment and a loan term or time frame. That loan is scheduled to be paid off with those payments. Installment loans can be secured with collateral such as autos, RVs, and of course homes. Having multiple account types shows lenders that you are responsible for managing multiple debt types and payment structure. This factor can contribute to 10% of your overall credit score.
Factor number 5, the number of hard inquiries you have on your account and how recently they were pulled. Every time your credit is pulled, an inquiry is made and it does lower your score. The more looks at your credit in a short period of time, the more points your score may drop. Lenders do not like to see many applications for credit in a short time period. When you apply for a new credit card or installment loan, they will see recent inquiries as well as other lenders that have looked at your credit in the last 2 years. This history is a good indicator of credit-seeking activity and alerts the lender that you may have new debt out there that is not yet being reported to the bureaus. Inquiries make up about 10% of your FICO score. In general, you don't want too many people checking your credit activity in a short period of time.
While this may seem like a lot to remember, in reality, these are all things you'll need to be aware of and practice. Whether or not you're getting a new loan, and regardless of whether you already have credit cards and loans, or if you're just getting started with credit. These factors are important as they can affect many, many areas of your life. The cost of your auto insurance, employment opportunities, rental applications, and of course, obtaining a mortgage to purchase a home.
For the best results, remember to pay on time. Utilize only a few small amounts of your available credit or quickly pay down any credit you've used. Keep accounts open a long time with satisfactory payment history and show that you can have and can maintain various types of credit. Stay tuned for more videos with credit tips and be sure to subscribe to my channel.